Welcome to the Deep Dive. I'm John.
And I'm Wendy.
We're both staff here at WeWire, and we're the team that puts together your weekly Stay Wired recap.
That's right. And today, we're doing something a bit special, a real deep dive into a part of the global financial world that's just, well, exploding.
It really is. It's a fascinating story. Our mission today to kind of cut through the noise, pull out the key insights, and help you get a handle on the forces at play.
Absolutely.
So to kick things off, let's start with this really striking statistic from Chainalysis. Blockchain analytics shows sub-Saharan Africa accounted for, get this, 9.1% of global crypto transactions in 2024.
9%, that's already huge.
It is. And here's the bit that really grabbed me. USDT, Tether, dominates 60% of the P2P, that's peer-to-peer trading volume.
60%, wow.
Yeah, and that adds up to roughly $3.6 billion in monthly transactions just across Nigeria, Kenya, and South Africa alone.
Incredible numbers. And like you said, that's just 3 countries. So today we're going to unpack what's really fueling this booming P2P economy.
Right, and how global events are feeding into it, and importantly, the impact of new regulations like the U.S. Genius Act.
And for you listening, understanding this isn't just about crypto. I mean, it's about shifts in economic power. It's about financial inclusion from the ground up.
And really the future of global trade itself. So let's jump right in.
Okay.
So that $3.6 billion a month figure, it really speaks volumes, doesn't it?
Yeah.
What is driving such massive adoption of stablecoins like USDT across Africa? Especially, thinking about those traditional banking hurdles we hear so much about.
Well, you hit on a key point right there. What's really insightful is how directly these stablecoins like USDT are solving real everyday problems. The #1 driver. It's bypassing those traditional banking systems.
They're all roadblocks.
Exactly. High fees, for one. Cross-border transaction fees can be, 7%, maybe even 10% in some places?
Ouch.
Yeah. And then there's the time factor. Settlements can take days, sometimes weeks.
So USDT cuts through that. How exactly does it work?
Right. So USDT, or Tether, it's what's called a stable coin, unlike Bitcoin, which goes up and down wildly.
Wow.
USDT tries to stay stable, pegged 1-to-1 with the US dollar. Think of it like a digital dollar on the blockchain.
Okay, digital dollar. Makes sense.
And because it's digital and on the blockchain, sending it across borders is way cheaper and faster than a bank wire. Almost instant, really. So traders, individuals, they can skip those high costs and long waits.
That immediate cost and time saving, that's powerful. But
Yeah.
what does that do for actual financial access? Especially in places maybe underserved by banks.
That's a great question because it's not just about fixing problems, it's opening up new possibilities. And this is amplified by, 2 big things: demographics and tech.
Okay.
Africa has this incredibly young population, 70% under 30, very digitally native.
Right.
And mobile phone usage is sky high. Over 85% penetration in key markets. So you've got this young, tech-savvy population with phones in their hands.
A perfect storm for digital adoption, basically.
Right. Pretty much. And we see it in the numbers. Platforms like Binance, they reported a huge jump, 120% year-over-year increase in P2P USDT trades just in Nigeria.
Wow, 120%.
Yeah, it just shows how quickly people embrace these tools when they solve a real problem and they have the means like a smartphone to use them.
So tech-savvy youth, mobile access, and a clear pain point with old banking systems.
Yeah.
That feels like a recipe for disruption.
It absolutely is, and it's part of a bigger picture, too. The World Bank noted that sub-Saharan Africa's whole digital economy grew 15% annually between 2020 and 2024.
15%.
Yeah, and blockchain, with its secure and transparent nature, is kind of underpinning some of that growth. But here's another layer, something I hadn't maybe fully appreciated: geopolitics and currency volatility.
Okay. Now that's interesting. We usually think tech innovation, right? But you're saying global instability is actually pushing this?
Yeah.
How does a conflict far away translate to someone in Africa choosing USDT?
It's actually quite direct. Look, global trade restrictions have tripled since 2019. The world's more fragmented, less predictable. Combine that with volatile local currencies. The Nigerian naira, for example, lost 40% against the US dollar just in 2024.
40%, that's huge.
It's massive. So when your local currency is unstable and getting actual US dollars through the banks is hard, maybe because the country itself has limited reserves, what do?
You look for an alternative.
Exactly. A stablecoin like USDT becomes, critical. It's less about speculation, more about just preserving the value of your money or being able to trade it all.
So it's almost a safety net. Resilience for small businesses, individuals.
Precisely. And it's empowering micro-entrepreneurs hugely. The data shows 80% of African P2P users fit that description.
80%. Wow.
Yeah, think about a small trader, maybe importing goods from Asia. Before, they faced delays, huge fees. Now, USDT lets them settle instantly. It unlocks global markets for them.
So it really connects them globally in a way that wasn't possible before.
Absolutely. Bypassing those old prohibitive costs and delays, it's quite transformative, really.
Okay, so it's not just about ditching inefficient old systems. It really sounds like these global events are actively, pushing this adoption forward. What's the link between something like, say, conflicts in the Middle East and the rise of USDT in Africa?
Yeah, that's a really crucial connection. And it's pretty direct. Geopolitical events like the Russia-Ukraine conflict, the tensions in the Middle East through 2024, they seriously disrupt global commodity markets.
Oil, especially.
Oil's a big one, yeah. It's a third of the world's seaborne trade. So when that gets disrupted, it sends ripples everywhere, especially for economies that rely heavily on imports.
Which would hit economies with limited foreign exchange reserves the hardest,
Yeah,
making it even tougher to get dollars.
exactly. The World Bank flagged that oil price volatility, driven by those Middle East tensions, could push prices up 6% in 2024. That strains African economies, squeezes their already limited USD reserves. Add in more trade restrictions, and suddenly getting dollars through the banks is really difficult. So people look elsewhere.
And USDT becomes the elsewhere.
It does. And what's fascinating is how fears of sanctions or tariffs, like the ones the U.S. talked about in 2024, actually drove adoption.
How so?
Well, USDT is seen as this sort of decentralized alternative. It lets African users keep trading, especially with partners in Asia and the Middle East, for commodities, even if the traditional banking routes get choked off or become politically risky.
It's like a workaround, a parallel track for trade to keep flowing.
Pretty much. It's a hedge against that kind of disruption.
And does this tie into that whole shift towards gold we've seen?
It does seem connected. I mean, gold hit that record, $2,331 an ounce, back in April 2024. A lot of that buying was central banks in emerging markets.
Moving away from the dollar.
It reflects that broader trend, yeah, a move towards what some call politically neutral assets. And here's the interesting paradox. USDT is pegged to the dollar, right, for stability. But it's actually being used to facilitate trade that happens outside the traditional dollar system. African traders are using USDT to settle deals in oil, but also gold, other commodities. Bloomberg noted that growth in non-dollar commodity contracts.
So it uses the dollar stability, but helps bypass the dollar's traditional dominance. Fascinating.
It really is a complex dynamic playing out.
Okay, now this adds another layer entirely. How does something like the U.S. Genius Act, this new piece of legislation, how does that fit into this vibrant, kind of informal, global P2P economy?
Yeah, this is where regulation meets reality, isn't it? The Genius Act that's guiding and establishing national innovation for U.S. stablecoins was signed July 18, 2025. It sets up a federal framework for stablecoins like USDT.
And that has ripples globally, not just in the U.S.
Oh, absolutely. Major implications.
So what are the main requirements? You mentioned things like 100% reserve backing. What does that actually mean?
Right. That's fundamental. It means for every digital USDT dollar out there, the issuer has to hold a real dollar or something equivalent and super safe, like short-term treasuries, in a regulated bank.
Okay, so it's fully backed.
Fully backed. And crucially, issuers have to comply with strict anti-money laundering AML rules and sanctions protocols. They need monthly audits, independent ones, verifying those reserves, and there's federal oversight. Big steps towards formalizing things.
On one hand, that sounds like it could build a ton of trust, right? Make USDT seem safer, more reliable. Could that actually boost adoption in Africa?
It definitely could. Think about Africa's large unbanked population, maybe 60%. They're looking for reliable digital payment options. So more trust, more transparency from the Genius Act, that could absolutely increase appeal and adoption.
And maybe attract bigger players, too. Institutions.
That's the other potential upside. Regulatory clarity might bring in more traditional financial institutions, boosting USDT's legitimacy for larger cross-border deals, moving it beyond just P2P.
Okay, that sounds positive. But are there downsides? If things get more regulated, more formal, does that risk squeezing out the very users who benefit from the current informal system? What about costs?
That is the huge question. It's the classic trade-off. While clarity is good, those strict compliance rules, the audits, the oversight, they cost money.
Right.
Platforms like Binance, which handle a lot of this P2P trade, might face significantly higher operational costs. And where do those costs go?
Passed on to the users, probably.
Likely. And if transaction fees go up even slightly, it could really limit P2P trading in places like Nigeria or Kenya, where users are very cost sensitive. The low cost was a major draw.
So the regulation designed to legitimize it could inadvertently kill the grassroots accessibility that made it popular. A real tension there.
Exactly. Between formal rules and informal innovation.
So what's the take from organizations like the World Bank on how African nations should navigate this?
The World Bank's view seems to be that, yes, regulatory clarity helps financial inclusion, but African nations really need to develop their own frameworks too. Rules tailored to their specific situations.
Not just copy-pasting U.S. regulations.
Right. It's about finding that balance, encouraging the innovation, protecting consumers, but not stifling the P2P economy with rules designed for a completely different market context, building their own robust digital infrastructure.
These domestic drivers and regulatory changes are clearly huge, but like you said, they don't happen in isolation. So, turning to our weekly Stay Wired recap context, what have we seen on the global stage this week? Maybe in currency moves, commodities, things that reflect or influence this digital shift in Africa.
Yeah, absolutely. Looking globally, we saw, for instance, German unemployment figures coming in a bit better than expected in July. Now, that's not directly Africa, but it paints a picture of the wider economic currents that affect global trade flows.
Right, the backdrop.
Exactly. And then closer to our focus today, in Africa, we saw Kenya's inflation tick up to 4.1% year-on-year in July. That kind of thing can eat away at purchasing power, pushing people towards assets perceived as more stable.
Like stable coins.
Potentially, yes. And we're also keeping an eye on South Africa, trying to finalize a trade offer to head off possible U.S. tariffs. Another clear example of how global trade policy directly impacts African economies.
And might push businesses towards alternative ways of trading.
Precisely.
Okay, let's zoom in on currencies, because that's so key to the stablecoin story. What did the FX Corner show us for African nations this week?
Well, the FX Corner really highlighted those contrasts that drive stablecoin use. Look at the Ghanaian cedi. It weakened significantly, down over 30% year to date. That reflects ongoing struggles with fiscal consolidation.
Getting the government's finances in order.
Right. And when that falters, confidence in the currency can drop. But then you look at the Kenyan shilling, actually quite stable, up slightly, 0.19% year to date. That's backed by consistent monetary tightening.
Central bank raising rates.
Exactly, to control inflation, support the currency. And the Nigerian naira, despite that big drop earlier in the year, actually saw a small gain, 0.44% year to date, helped by FX interventions and better oil receipts.
So huge volatility in some places, relative stability in others.
And both scenarios can push users towards the perceived stability of something like USDT, you see.
Yeah, that makes sense. And commodities. We linked them earlier to geopolitics and payment solutions. What's the latest there?
Oil prices ended the week stronger. Brent crude was around $71.74 barrel, even though U.S. inventories rose. What propped it up? Geopolitical risk.
Still bubbling away.
Yeah, things like potential U.S. sanctions on buyers of Russian oil. It just reinforces that point about global tensions creating a need for alternative ways to settle trade. Gold, on the other hand, was actually down for the week. Spot gold fell about 1.2%, influenced by a stronger U.S. dollar and maybe lower expectations of Fed rate cuts, despite ongoing friction globally.
So still complex interactions there.
Always. But these commodity movements, as we discussed, they directly feed into the need for stable, reliable payment solutions when the traditional ways feel uncertain.
Got it. And just a quick note for our listeners, if you want deeper dives into specific stocks and market movers like NVIDIA, NIO, Apple, Tesla, our full weekly Stay Wired recap has that. But remember,
it's informational only, not financial advice. Always do your own homework before investing.
Absolutely. Wow, what an incredible journey, really digging into Africa's digital economy today. From that grassroots innovation, born out of necessity, all the way to global policy decisions intersecting with what's happening on the ground.
Yeah.
So many layers.
It really is. Africa's P2P USDT economy, that $3.6 billion monthly figure, the wider $6 billion market, it's truly at a crossroads, isn't it?
Feels like it.
Yeah. The U.S. Genius Act, it could provide a real boost with that regulatory clarity, maybe attract bigger money, help with financial inclusion. Or the compliance burden could stifle the very low-cost, informal ecosystem that made it thrive, especially if policies are too heavy-handed.
Right. And meanwhile, those geopolitical risks, the trade barriers, they probably aren't going away. So that will likely keep pushing USDT adoption as people look for resilience.
And what about competition? Things like CBDCs.
Central bank digital currencies.
Huh?
Yeah, the IMF is exploring them. Many countries are. They represent a different model, state-backed digital currency like digital cash, not decentralized like USDT. That's definitely future competition.
But USDT has a head start.
It has global reach. It's relatively easy to use. That gives it a strong foothold right now. I think the key for African economies is finding that tricky balance, encourage the innovation, but also manage the risks with smart local regulation, sustain the transformation.
So the final thought for you, our listener, what does all this mean for you? As digital currencies reshape trade, reshape finance, how might these trends change how we all think about economic resilience, about access, especially when the old systems seem increasingly strained? What part of this deep dive really stood out to you?
Lots to think about there, definitely. Well, that wraps up another deep dive. We hope you're feeling a little more well-informed, maybe got some new perspectives.
Hope so.
We'll be back next week with another deep dive as part of the weekly Stay Wired recap. Till then, keep digging for those nuggets of knowledge.
Stay Wired Weekly Recap was produced by WeWire,
a B2B company, bridging the banking gap between emerging markets and the world.
Tune in same time next week for the Stay Wired Weekly Recap.